Now, the other thing about fitness, there is financial fitness, and who better to talk about financial fitness than our dear friend Paul Correa from Fiduciary Wealth Management in Gibraltar this morning. How are you, Paul?
Very well, thank you, Carl. Thank you very much for having me.
It's a pleasure. It's always good fun talking to you. And this is Ask Anything About Portugal Wednesday. And of course, this is the time when you're with us in the month to ask us about things financial, wealth planning and money, and the general picture of investments. Always a lot of fun to talk to you to get your investment predictions. I think you might have a few juicy ones for us this morning.
I hope so. Yeah.
All right. But let's talk about the general picture first, because let's face it, I think people are getting a bit twitchy. You know, we've been out of our normal run of things. A lot of people have been out of work, and it's quite an uncertain time in the world financially. How would you characterize and analyze that right now?
No, I think you're spot on, Carl. I think markets are at the knife's edge. It could go either way. Markets are extremely expensive relative to the entire market history. I think we're trading at multiples we haven't seen for quite a while. And yes, on the one hand, we've got all this pent-up demand from lockdowns ready, you know, this potential consumer spending.
Yeah.
Once we unlock the economies, and that could create inflation and drive growth. But equally, on the other hand, we have this mountain of debt which needs to be repaid. And, you know, there'll be scarring within certain sectors of the economy. The question is, once all this stimulus is removed, whether the economy has enough legs to run on its own, and how do we undo the excesses of the last 10 years, and, you know, and how do we repay that debt, and when do we pay that debt back? And I think potentially, yeah, we might have a period of, you know, the unlocking could result in strong growth in the next 12 to 18 months, but equally inflation might rear its ugly head, and we've got the prospect of higher corporate taxes to start paying back the debt, which is extremely negative for financial markets. So it's a difficult one to call, Carl.
It is, but something to be aware of, that picture there of how there might be something of a bounce back in the short term, because there is, as you say, the velocity is just waiting there, isn't it? And the wealth is waiting there. People have been unable to go out and spend money, and then suddenly they are, and that will make things look really good for a little while. But that doesn't take into account the picture behind the picture was what we were facing and what we were going into before the pandemic even.
Yeah, and to use an expression, is it a bounce or is it a cat bounce? Yeah.
Yes, I remember that. Dead cats don't bounce. Yes, indeed.
Exactly.
Yes. Okay. So no animals have been hurt in the making of that metaphor, but it paints a pretty good picture, that, doesn't it? My goodness. Okay. So this is something that anyone who dares pull their head out of the sand, I guess, might want to be aware of. And, you know, a lot of people in the financial world at the moment can look like doom mongers, can't they? And, you know, tough times are coming. And then the others, you know, the Pollyannas of the financial world. See, no problem. We can carry on being bullish. There's a lovely return in the marketplace of consumers, and even the banks might be lending, because they've got cash to get rid of at the moment, haven't they? So a very rosy picture short term could be very deceptive, right?
Absolutely. They are washing with money, because remember, every time they do quantitative easing, and I know that I'm repeating myself again, but for the benefit of your listeners, when you do quantitative easing, you know, we're not printing money, but what we're doing, we're creating a loan in the balance sheet, right? And that money ends up in the balance sheet of the banks. So they are washed with money, they're flooded with money. The problem is they're not extending credit because conditions are a bit tight. Now, if they start lending, then of course the economy, the wheels of the economy start turning equally. All the paychecks, the helicopter money which is being paid directly, you know, is not going into consumer spending because we're effectively in lockdown, but it's going directly to the stock market. Now, if we start seeing flows out of the stock market into the real economy, then we'll see a reversal of the trend. The economy bouncing back, but the stock market going down.
Yes, okay.
Because the money will be taken out of the stock market, So they're taking the money out and then they're spending it in the real economy. Whereas what we've seen during the lockdown is the money that they could have been spending, they're not spending, they're investing in the stock market, right? So it's quite a contradictory scenario where when we're in lockdown and the economy is retracting and is in contraction mode, we're seeing stock markets going up. And then when the economies open up and you see economic activity, the stock market could potentially as well come down because they're pulling the money out. So very difficult market to call.
Absolutely. And I think we've made this comment before that people are getting more financially savvy and are even learning about the thing we've just talked about, which, I mean, years ago, people wouldn't have cared about that, would they? They've just been in the days when you might have had one breadwinner in the house, the golden days, breadwinner in the house, stay at home mum, loads of kids, and that one wage was enough to support everybody. And they probably had a nice car and a nice house. And, this is hard for young people to believe now, isn't it? That would be possible, that there could have been one breadwinner in the house. Those days are over and people are getting more financially savvy, right? And they need to either wise up themselves or consult somebody like you to fill in this picture for them.
Well, I think it's a very valid point. I remember when I started in private banking in 1989, the clients were not financially savvy. So they depended, there was a high dependence. Now, when you speak to clients, they can engage in a conversation and they're extremely knowledgeable.
Yes.
That they have access to so much information, so they can have and they can, have their own views on the financial markets, and it's they use reasoned argument why they take a view on a particular asset class or whatever. That wouldn't have happened 30 years ago, but things have changed.
They really have, haven't they? So a couple of questions coming in, and then your tips for the day, because I know you're a busy man and we don't want to keep you too long. And we've got the doc waiting. So any questions of a health and well-being nature, the doc is limbering up in the green room to answer those as we stay here after Paul goes on his way to study his screens and graphs, I suspect. First question is, where is the beard, Paul? Paul Richards is very observant, isn't he? When you had your lockdown beard, I think, last time in the webcast.
Well, I don't know whether Paul, but by the way, absolutely lovely guy. I've spoken to him separately. I think I said I had the shaggy look on Thursday.
Yes,
sorry?
Of Scooby-Doo.
Of Scooby-Doo, the shaggy look. But I thought this is very indecent. I mean, there's reputational risk issues. Not for me. I couldn't care less. But it's more for expats in Portugal.
Yes.
And off air, you did say, "Come on, Paul, you have to spruce up." So I thought, okay, fair enough.
And that's a bit rich. That's a bit rich coming from me. If you want to find out more about Paul, go to our wealth management section in our business directory and let Paul know where you've come from. And if you want to talk to him about your personal wealth management, the other question, and it's not going away, Paul. Before you go into your tips for today, Navendu Senior saying, "Is Bitcoin a good option or just a bubble for now due to the increase in online activity?" $45,000 over for Bitcoin yesterday. It was a nice ride.
Was it 45 or 63? It could have been 63,000.
In euros, is that? I think I was giving.
Sorry.
Giving the dollar price there, 45K. Okay. I mean, I can find out while we're live on it. But have you been turned yet? This is the ongoing conversation between us. You're a bit crypto averse, aren't you?
I am. I'm very crypto averse because I don't see an intrinsic value in Bitcoin. Look, the thing is, Bitcoin is supported by a younger generation that they are anti-establishment and they absolutely hate the fiat currencies, which I can partly understand.
Yes.
But I was speaking to someone, I can't remember who it was, and they said it would be, for clean. And it was you that you said that it wasn't. I think it was you. No, Carl, sure. Didn't you say that the extracting of the Bitcoin was?
Yes. It's highly energy dependent, and that's one of its great criticisms. Is
correct
the energy needed to mine it. And even the mining is virtual, really, through complex mathematical calculations using computing power. But that's what the detractors say. It is an eco disaster the way they have to do it. So yes, and that is a concern for young people as well as them being rather having an averse view towards fiat currency.
But I think so long as the fiat currencies are coming under pressure And so long as there's a lack of faith in the current monetary system, I think Bitcoin can be bid higher and higher. Because remember, Bitcoin, there's no intrinsic value. There's a scarcity element. There's X number of Bitcoins. Okay, they mine a few here and there, but it's limited. And so long as demand outstrips supply, and so long as there's a buyer for every seller that wants to bid higher, it'll continue going up.
Indeed.
Now, until there's a catalyst, that there's a trigger where we see some kind of correction in the market, and then we would have to see whether Bitcoin can hold its value or whether it crashes together with all the other assets. And my gut feeling is that we'll see a major correction at some point.
Yes. Actually, to make a correction, I'm sorry, it was 46. Well, currently, I'm looking at my screen now on my Revolut app, 46,751 for a single Bitcoin in pound sterling rate, that is.
Oh.
So, yeah. And one interesting thing I heard, it might have been Peter Schiff, who we've talked about before, said everything that was made out of gold, comparing it to gold and a tangible backed thing, everything made out of gold is still around. The gold is there. It's been knocked into different shapes, isn't it? Jewelry and this, that, and the other. But every bit of ground, every bit of gold, not oil, that's another subject altogether. Every bit of gold that's come out of the ground is still around. And I see both sides of this Bitcoin thing. And I'm not a big investor, but where I have put money in Bitcoin, it's done me proud. Nothing can touch it. But I think, it would take a spooking or some sort of governmental intervention. That's what people have to be be careful of, I think, at the moment with Bitcoin. And one useful strategy I heard was just to cream a bit off now. That it might be the time to be taking some of the top off and leaving and then that's a standard investment strategy, isn't it? If you start getting scared, take the cream off but leave the milk.
No, absolutely. I mean, what you do is you take the profit and a bit more, and you leave your original investment amount. Okay, so you've taken all your capital, a lot of profit, and just let it a bit to run. But look, you've hit the nail on the head with what you've just said. You've said there could be government intervention. I was reading last night that's exactly, if the central banks start fearing that there's a loss of faith in the fiat currencies and in the current monetary system. Remember, these guys depend on that. They make the living out of the monetary system. Yeah. We spoke about Bloomberg banning Peter and all that. if they see that the system is coming under, has lost his faith and people have gone for alternatives, they will potentially ban Bitcoin and regulate Bitcoin to make it as difficult and complex as it is. And then there will be a loss of faith in Bitcoin as a holder and a store of value. Yeah. So I agree with you. I think that could be a catalyst for a major correction.
Yes, and governments themselves getting into crypto as well. Very interestingly, digital currency. So yeah, we'll put that to Jones. There are some crypto fans. They're always around, aren't they? Jonesy is here. Bitcoin $64,500 now. Oh. Yay, watching that day by day, and we made 10% in the last 24 hours. It's no wonder the traditional investments you can't compete are reversed to crypto. A bit of a dig from the stalls this morning, but but what you do with it, the banks are awful. And this is what you do with the cash. Many banks are awful and many people are withdrawing cash. Who wants money in corrupt, useless banks? Okay, I don't know if you want to go there, Paul. You're a busy guy, you've got things to do, and you want to give us a few tips. But do you want to talk about cash?
Yeah, let me tell you something. Based on my personal experience trading in markets for 30 years.
Yes.
Cash is king when there's a liquidity crisis. This is not a liquidity crisis because we are awash with money. Yeah. But in a liquidity crisis, and liquidity can be taken out of the system very, very quickly. In the same way that they inject liquidity, they can take liquidity out, right? And cash is king. So, whilst I agree with this gentleman that has made that comment, I still think a bit of cash is not a bad thing in this market. And then go for commodities. If people believe that we are entering into a inflationary cycle, then hold commodities, because I think we are just entering the beginning of a super cycle in commodities. Gold, silver, all the industrial base metals, lumber, agricultural commodities, uranium, get in, because enjoy the ride. And you're buying cheap.
But you have that. Okay, you have that inflationary window to worry about, though, don't you? Because the thing people really worry about with cash, understandably, is banks saying you can't have any, but so you keep it yourself. I guess that would deal with that particular problem. But then the hyperinflation. So you've got to be careful, haven't you? You've got to wait for that moment of liquidity where cash is king, and then when you see it being printed ad lib, then cash is not going to be king anymore. Cash is going to be what you. I was going to make a very unnecessary and unfortunate metaphor there, but it becomes useless. You know, it's not worth the paper it's written on at a certain point.
Totally. I mean, look, if you don't believe in the fiat currencies and in the monetary system, and you don't trust the central banks, you know, you either have it in cash or have a proportion in cash to take advantage of any market opportunities, or you put a lot in gold and silver, because I think those investments will turn good once, you know, we see a loss of faith in equity markets, financial systems, the economy, the running of the economy.
Yes. Okay. So let's, before we, I'm sure it's so enticing, isn't it, to talk about this in the future, the crystal ball, etc. And by the way, we're not giving financial advice. Paul is just talking about his opinions, really, from his 30 years of working in finance, as you've heard there. So, what are your tips currently, Paul, at the moment, for what you might invite people to take a look at? And what they do with it is up to them, of course. They must do their own.
Yeah. Well, I mean, one of the areas where I think people can make a lot of money if they have the risk tolerance and the patience to look at it as a long-term investment is, you know, linked to the electrical vehicle story is battery energy storage. I think that is is a huge growth area. And look, I'm not giving advice. I want to make that clear, but there's a lot of small, I wouldn't say small, they've been in business a long time, but they're relatively, in terms of market capitalization, quite small, but they are in the battery storage space. And, you know, and they're worth a small investment with a longer term view in mind. And I'll just give one for your readers. I'm not giving any advice. It depends on the risk tolerance. You know, it is higher risk, but I think the long-term opportunities for growth and the financial and the, you know, the financial statements that are coming through from the company are increasingly, you know, earnings per share going up and so on. So the company is called Largo Resources.
Largo, Largo?
Correct, Resources Limited. And I think it's quoted in the Canadian and US Stock Exchange.
Okay.
And they are into battery storage.
Okay. So
linked to the electrical vehicle, which is a huge market. I think the market has potential to grow, you know, 200, 300 fold in the next 10, 12, 20 years.
And that's the key, 10, 12, 20 years. We're not talking crypto flutters here. We're talking about long term.
Long term, because the potential is there. You know, battery storage will enable, you know, electrical vehicles to run and you know, how do you store energy from wind and solar and keep it somewhere where it can be tapped into when required.
Okay, hydrogen investment. Would you agree with Gary there, who also says, yeah, with so much debt, any inflation rise could be devastating to people who are hard pressed at the moment, and that is the problem in it. The people on the margins who could be pushed one way or the other. But hydrogen investment, is that on your list at the moment?
I haven't looked at it, but I'm sure it's a good investment too.
Okay.
Because
anything else for us this morning? Largo was a nice tip from the top. Anything else that you're considering?
I think I've been quite generous. I think what we should do is we should discuss Largo in more detail.
Oh, go on, yeah, please do.
Next time. I think we should go into the excuse me, into the nitty-gritty. But I'll tell you what the code is. I think the code could be. Oh, let me. If you just bear with me a second, I'll tell you what the.
Yeah, absolutely. So, while you're looking at that, I'll just read a few comments. Hydrogen investment is Gary's little tip for us this morning. Will mobile chip industry, is that a good investment? And hybrid cars, I guess it's in a similar sort of area, isn't it? The way that demand for chips, if that's what he's talking about, mobile chip industry, that's not like fish and chips.
No, I think he's referring to maybe semiconductors, which is linked to 5G. I think it has huge potential if that's what he's referring to.
There you go.
But Largo I'll just give you the symbol.
Yes.
The symbol is L for London, G for Giovanni, O for Orlando, R for Richard, F for France.
Okay.
LGORF. That's
Lagor.
the symbol.
Okay. All right.
Yeah, Largo Resources Limited.
What? So stocks have a little call sign like an aircraft, do they?
They all have signs, yeah. So you
Okay.
can access them. A unique code that identifies the security. So if you go in, I think it's trading at $13 a share.
Yeah.
But the potential and they have a investors call in the next few weeks, and you tend to find that when they make these press releases, and explain the story moving forward, you can see a big surge in the price.
You'll be watching out for that. Okay, so we'll see you back here in 10 years to get an update on that.
Exactly.
Just one more question, and before you go and do what you're doing today, property long-term always wins. Would you agree with that sentiment from one Paul to another there?
It depends where you buy. They say with property, it's all about location, right?
Indeed.
And it's also the cycles as well. But look, if you're looking at generating an income stream, and you take a long-term view, you can buy some. Paul is right. Some buy-to-let properties, and that will give you an income stream in perpetuity, right? And they will increase in value.
Yeah.
Again, we go back to the same thing. You have to be patient. You have to see it as an asset where the money works for you rather than you have to work to earn money, right?
Yes.
And property can be a source of income for the long term.
I saw a meme you reminded me of a meme, and if I can remember it correctly, poor people waste time making money, and rich people use the opposite way around.
No.
You use money to save time. Is that correct in your estimation?
Absolutely. Look, what I would tell the audience today is read the book Rich Dad, Poor Dad by Robert
Kiyosaki.
Yeah. Because that explains it very succinctly, very clearly, and it's exactly what you're referring to. And this is what the book is all about. Yeah. He had his poor dad, who was an intellectual working for government, and he had his rich dad, which was actually the father of his friend Mike, who was an entrepreneur who had no qualifications, but was an amazing entrepreneur. And his rich dad said, get your university degree and work for an employer. And his rich dad said, work for yourself. So interesting concept. It's all about building your balance sheet and your asset base, yeah?
A fascinating point to end on there. So LGORF is one to keep an eye on, and we look forward to speaking to you again soon, Paul. Have a great day over there in Gibraltar.
Thank you. Same, Carl. Thank you.
All right.
Ciao. See you.